What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down why Tesla is red in the after hours, why the whole market is essentially red in the after hours, and why this may lead to a bit of a sell-off to come in the markets over the next couple of trading days because earnings came out, and for the most part they were absolutely horrendous. So I'm going to break down what happened during earnings, why this will likely lead to some downside in my opinion, and why I wasn't very confident about what the market would end up doing until earnings came out. And now I believe the market has now shown us what is likely to come. Now, before I break anything down, before I talk about what's going on with the markets, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 5 free stocks plus free $0 commission trading and also very low margin rates. And if you put in $1,000, you're guaranteed 15 free stocks. It's a limited time offer. The offer ends in just 2 weeks. Check it out before they run out. With that out of the way, let's get on with the video. Tesla was up almost 4% for the day, but I warned everyone that you shouldn't necessarily be too fixated on one direction just yet, at least in my opinion, because of the fact that we had to wait for earnings. Now, one of the things that happened was I was looking at the charts and I mentioned to you guys that Tesla was showing some signs of a bearish divergence. And I was actually a lot more bearish in my earlier videos. I'm sure you guys remember that. I mentioned the fact that I didn't fully trust a lot of the rallies, and I thought that Jerome Powell could end up coming out as a big hawk and end up causing the market to drop. Instead, Jerome Powell ended up pumping the markets, so I wasn't really sure. And a lot of us were just unsure about what would end up happening then because the market just kept pumping, and that was very surprising for many of us. But then I warned everyone that, look, we have to wait for earnings to actually, develop for us to get a good understanding of what is likely to happen. And now, the market is still showing the same divergences, and at the same time, earnings ended up being a big miss, and the market is starting to reverse. So could it be that this entire time when I was calling for the fake rally on Tesla a couple of days ago, I was a little bit early and earnings is the thing that's going to cause the reversal? It's very possible and very likely. And unfortunately, earnings were horrible. I'm going to show you what just happened to Apple, why Apple is crashing, why Amazon is down pretty hard. Google is down almost 6%. The whole market is red pretty hard in the after hours. So let's break this down. For tomorrow, I want to note that we have unemployment data coming out. Okay, for unemployment data, it's going to be important because it really gives us an idea of how the Fed's tightening policies are affecting this economy. The market wants there to be tightening, they want there to be, higher unemployment. And if it ends up being lower than expected, or even like barely at expectations, it may not cause a massive move, but it could actually fuel the potential sell off that's likely to come. I also want to note that I can't guarantee anything in the markets, guys. I'm not promising anything when I say the things that I say. I'm just using my own intelligence and my own reasoning to come to a consensus. But you always have to be prepared for anything as a trader. But the odds right now are favoring more downside to come. And that's because of something else that just came out. I mentioned to you guys the biggest thing for today and why today was a massive day was earnings. Earnings came out. And unfortunately, earnings were horrendous. We actually saw Ford do pretty horrible on their earnings. I think Starbucks kind of missed as well. Some companies did end up beating, but when it comes to the three most important ones, they were Amazon, Google, aka Alphabet, and also Apple. The three big dogs, and all of them ended up missing big time, at least to a very large extent. Looking at Amazon, they had the least profitable holiday quarter since 2014, the biggest annual loss ever as a public company. And we also saw more misses on estimates. Their operating profit declined year over year. The first quarter forecast missed, and they actually fell 7%. They're currently down like 4%. Not good whatsoever. Looking at more specific things, the headlines are coming out. Amazon they drop after revenue beats, but EPS miss, and their EPS was horrible. Their net sales were actually a little bit higher than expected, which is pretty decent, but that's basically all there was that was decent. Looking at their online sales, they missed. Their earnings per share was horrendous, only 3 cents versus 17 cents expected. Not very good. Their physical store net sales ended up just barely meeting expectations, and their web services ended up missing lots of misses here and there. Overall, guidance is not looking that good for them, and we did see a big blow for them, especially from that earnings per share. Investors are likely not very confident. They're not happy right now. Let's talk about Google. Google also did not do well. Alphabet, aka Google, they missed on earnings and revenue as YouTube falls short. Let's break down some numbers real quick. Earnings per share, big miss. They ended up missing only $1.05 versus $1.18 expected. Revenue was about 76 million flat. They were expected to give us at least 76.5 million. So they did miss that by a bit. YouTube advertising revenue was just under 8 billion versus the 8.25 billion expected, so another miss. Google Cloud revenue was a miss. Traffic acquisition cost, another big miss. So we're seeing more and more misses from Google, from Amazon, and the tightening of the Fed's rates. They're tightening of policy, and the rate hikes, they're just not helping whatsoever. We also saw Ford miss big time, so did Starbucks. Looking finally at what CNBC just reported, big miss by Alphabet, big miss on revenue, and we are seeing the stock down over 6% as of right now. Now, finally, what's going on with Apple? Apple, the big dog, the big company, they're actually down big. The sales are down 5%, the largest quarterly revenue decline since 2016. That is not good whatsoever. For specific numbers, we could see they missed on earnings per share. They missed on revenue by some margin. They're down over 4 billion. They're down 5.49% over 4 billion on revenue. That's pretty bad. iPhone revenue is down by 3 billion, down 8.17% year over year. Mac revenue is down by over almost $2 billion. They're down 28.66% year over year. That's not good. iPad revenue is up to some degree. It's actually up about 29%, up $1.7 billion. Other products revenue is actually down pretty hard as well, 8% down. Service revenue is actually a little up, and they barely met on margin. The point I'm trying to make is that was not a good report from Apple, one of the worst reports we've seen in many years. Lots and lots of misses. And this is pretty much very rare because typically Apple beats on revenue by big margins. They do very well. This may have shocked lots of markets. And then going back to this chart I showed you guys this chart right here. It basically shows the S&P 500's chart and then shows you the confidence inflows of smart money and dumb money. I'm not trying to say that this guaranteed anything. You have to remember that correlation does not mean causation. I want to make that as clear as possible. But if this chart tells us anything, there is a correlation between the market peaks in the past and the overall inflows of smart and dumb money. I'm not going to use that term, by the way. When we talk about smart money, we're typically referring to institutions. When we say dumb money, we're typically referring to retail investors. But I don't want to use that term just like that anymore. And please forgive me if I've done that in the past, because we shouldn't call retail investors dumb money. It's more like retail investors can be very intelligent. They just don't have the same resources and advantages that these other institutions have. But anyways, I don't really want to go into the full details about that. My point is, what does this chart tell us? Okay, as of recent, during major peaks, this was maybe like more common during like the middle of 2022 up until now. What you will notice, just look at from 2022 to now, when the market got this pump right over here, smart money was a little bit more confident. We came down right here, and then right here we saw, did I just say smart money? I meant institutions. Institutions were pretty confident in buying the dips from these lows right here, whereas retail was not as confident. And then we got this big run up in August. Okay, the run up comes. What happens is there's a big decline in the confidence of institutions, whereas retail starts buying up at the top. Retail was confident, Institutions were not, and this is when the market peaked. Then the market comes crashing down. We hit the new low of 2022. And what happens? Institutions start buying at the bottom. And what happens? Retail investors start selling at the bottom. This is what their confidence inflows tell us. They were not as confident. They start selling at the bottom. Institutions start buying at the bottom. And then the market starts pumping. This gave us the December run up. During the December run up, going into like the very, very beginning of it, the second week of it, when we reached the peak, institutions were less confident. They didn't really like the peak. They started selling at the top, and then retail investors started buying at the top, at least for the most part. They became way more confident. Their confidence went through the roofs, and then the market reversed. We came down. Now the market started pumping. We had this big pump, and I honestly wasn't sure if this would even play out. It was very convincing, very awesome pump. But then I told you, in order to stop this pump, we need some kind of interference. And it looks like we got the interference. Bad earnings are not good for the stock market. So what happened was the market's pumping. Okay, retail becomes very confident. I know a lot of people that believed SPY was going to 430, Tesla was going to 225, Tesla's going to like 300 a share. We were going to go to all-time highs. People were also believing that SPY was going to go to like 430. It was all over YouTube. 450 a share. The market was going to explode. Retail was buying and buying and buying. Even today at the highs, people kept buying and buying. Institutions were not buying to the same degree. They were actually not doing that. They were not as confident. And we saw institutions' confidence fall below 30. This is the first time this ever happened since, I would say, near the end of 2021. So is this chart perfect? No, it's not perfect, but it does give us somewhat of an idea of what was going on. Retail turned very bullish. They were very confident. Institutions were not as confident. And what happened? Well, the market was pumping. It wasn't a good time to buy at the top, obviously, because now the market is likely going to come down, just like what happened back in August. Now, for Tesla, let's talk about Tesla stock. I do apologize for going into way too much detail about other things, but this is going to dictate the whole market. Tesla had really nice volume. I love to see Tesla getting nice volume. Very, very nice pump. Tesla was leading the market today. But like I said before, the whole market will affect how many other stocks end up moving. And if sentiment is not the same, I do believe sentiment is going to shift because of these earnings. This could lead to a cycle of less and less confidence among investors. And this could also lead to a lot of downside to come. I don't think it's going to start off that bad. I do think the market's going to slowly pull back every now and then, maybe try to find a base or a bottom. But there could be something else that comes. And that's why I was warning everyone about CPI. So I think we are going to likely come down maybe for the next couple of trading days, maybe for another week or so. We might try to base and trade a little sideways, and then we're going to be determined by CPI. If CPI ends up not being too good, right, the market could continue to end up coming down even harder. If CPI is all right, the market could still, pump by the time we get to the middle of February. We're not there yet, but I just wanted to note that. Now, Tesla got some pretty nice volume. One thing I want to note is the fact that the short volume percentage is still relatively high. The shorts have not necessarily ran away just yet. There were still more entering their positions at these points in the markets. In fact, we did see some institutions starting to short the market even more. But now let's break down what's happening to Tesla. On the daily, we do have a potential reversal signal that's forming. We do have a doji at the very, very top. This does make it very clear that Tesla might start to reverse, but it may not fall in a straight line. I just want to note that we are a little bit oversold on the daily. And here's the problem with the RSI. The RSI was at, for example, 61 back when Tesla was in the 300s. I just wanted to note that. The RSI was super high weight at these higher zones, and now the RSI is in the 70s, despite the fact that we're way below the 300s. So it made me think that there is a potential bearish divergence, and this might actually start to play out, and we might start to see the market reverse. Earnings could be the first big domino, and now we're going to likely see some downside, in my opinion. Now, I want to break down a couple of other things before I get into more details about Tesla. I want to talk about SPY. SPY got a nice pump today. It was very awesome to see. We didn't actually form another divergence on the smaller time frames. I think on the daily we might have it still. Yeah, no, we almost have it. No, I think the daily one is not as prevalent as it was before. But like I said before, many people noted the fact that there were mega bulls. They thought the market was going to explode, and we do have a divergence that formed on the hourly time frame. So this is suggesting that the market is going to see a reversal, and we do have some gaps to fill on SPY. In my opinion, we are just a little bit red, at least in the after hours. Don't worry too much about that. We might try to push up to fill the gap. It's just like 0.2% up, and then we might start to come down. And I do anticipate this gap to get filled tomorrow with SPY coming down to about 410. We could even come lower back inside of this, like the bearish market area below that like 410 area. It could start to come very, very soon. I am anticipating some downside for tomorrow. For the QQQ, it's not looking the best because the QQQ is heavily dictated by stocks like Apple. I just want to note that we have a massive gap from 300 all the way to about 307. Now, if this thing ends up breaking below 308 by tomorrow, it's currently at about 309. If it breaks this support zone, it's going to likely come all the way down to fill this gap. What is going to dictate it? The answer is Apple, in my opinion. Apple really is a giant. So there is some potential downside to come. I also mentioned to you guys that there was a potential bullish divergence developing on the VIX. Looking at the RSI, I think it's on the daily. Yes, we do have a potential bullish divergence. Why? Let me explain. The RSI is showing right over here. The RSI was back at about, what is this? 29 when the VIX was at about 19 back in December. The VIX pushed up and then came all the way down. The VIX made a new low coming down to about 17, and this is just relative to mid December. And then what happened is the RSI is at this higher point. So there is this divergence that's forming that makes me believe that there's a bullish outcome pending. And we did actually see the VIX push up. It's up over 4%. It's going to likely continue to push up, especially as we approach the CPI date. So this tells me implied volatility is going to go up for SPY. Why? I'm not saying that the VIX is determining this. It's more like the S&P 500 is likely going to see some downside, and this is going to lead to implied volatility going up and the VIX beginning to respect a bit of an uptrend. We could get a breakout out of this wedge. I don't have it drawn out yet, but it's still pretty clear. The market does likely have some downside to come at the very least. And it could even get worse depending on many factors. The dollar was down. It came down to 100 and it actually bounced. And now it's at about 102. So it's still stuck in this range. It's not necessarily like falling extremely hard. It could change its course depending on many different factors. It's still stuck in this range though, but I do believe it is very possible for the dollar to start to pick up, which could drag the markets down. The 10-year treasury yield is pretty flat. It actually dropped a little bit below the very pivotal support, but it bounced right back up. And we actually have a candle that ended up forming right there. The body is actually still where the support is, telling me that this thing could still get a nice bounce. We may form a triple bottom, a very keen triple bottom like formation right over there. If this thing gets the bounce and we finally get the confirmation for this thing to push up, this could be a bearish signal for the stock market. It still is very possible, and I do think it's very likely, but we need confirmation first. Now, I also want to note the fact that looking at many other stocks out there, like Alphabet, this thing is still down about 4%, at least for the day. We have a huge gap on Google. Massive, massive gap. It's important to look at these. And also when looking at the daily, at the EMAs, we're well below on the daily the 5 EMA. And we do have a tendency of actually coming down when we see gaps forming like that. It's actually a setup that I was looking at today, but I'm going to go into more details about that later. Google's oversold. It's going to likely fill this gap. Amazon's probably going to do the same thing. We also have a big gap that's likely going to fill. Apple, same thing, same setup, big gap. It's likely going to come down to fill it, taking us down to 145 or lower. All of them coming down will drag down SPY and also the QQQ. And the selling pressure is likely going to affect Tesla. Tesla has a very similar looking pattern. We're well above the 5 EMA on the daily. We're actually above our 50 EMA as well. We have a nice gap right over here that's actually technically not filled on the daily. So I do believe going into tomorrow, whether Tesla opens kind of flat, we are going to likely start to decrease in our value and slowly approach 180. That's going to be my target, at least just for the super short term. I could see Tesla coming back down. This was previous major resistance, which Tesla managed to break out of from its supply zone, and now this thing is likely going to start testing it as support. I also believe that if Tesla breaks below 180, there are a lot of regions to really look at. If there's another black swan event, or if the market is already going to start dropping hard because of the bad earnings, it really could end up doing that. This could drag Tesla down even lower. There are lots of gaps down here in the 160s and even lower levels like that. I'm not going to talk too much about the gaps as of right now. Let's not worry about them. What worries me more is the overall setup on Tesla, the earnings that just came out, and the potential for more downside after this reversal candle, which tells me Tesla will likely come all the way down to about 180, in my honest opinion. On the other time frames, like the 15 minutes, I want to note the fact that there is still indecision right now on the chart. It did kind of fluctuate back and forth. I do believe Tesla is still set to come all the way down to this level. Could we have actually formed a double top like formation? It is still very possible. And are we about to form, a potential head and shoulders? That's also a possibility. So please watch out for this. This looks like a potential left shoulder that may have formed back in a couple of days ago in January. And the head we kind of formed may actually have formed today. So we could be forming a giant head and shoulders on Tesla. I just wanted to note that I'm not guaranteeing it unless we do end up coming down to this level, but let's first watch 180 because I don't really want to talk about like super low values or super high values. We have to first look at the current levels. And right now the current level is telling us that, look, Tesla might be coming down to this 180 level. Please be very careful. Currently, it's at about 186 in the after hours. If we do gap down, we might try to push up to fill the gap first before we continue to end up coming down. And if the selling does end up continuing tomorrow, especially because it's a Friday, 180 is my target on Tesla. Break below that, I'm going to be watching this 175-ish area, and then there's 170.8 around there, and many other zones like that. But like I said before, be very careful, be ready for tomorrow. The market may not look the best, and we are going to likely see some downside, in my opinion. Thank you all so much for listening. Have an absolutely incredible rest of the day. Remain calm, cool, and collected, and I'll see you guys in the next one. Tesla to the moon, because the long term future is still incredibly bright, and peace out.